LPG price rise adds to woes of common man. Shivraj Singh-led government in MP presents a populistic budget. February auto sales number failed to bring cheer for Bajaj Auto, and tech industry workforce swells to 54 lakh. This is Business Plus, your definitive edge to business and economy. In the first price hike since July of last year, oil manufacturing companies, also known as OMCs, have raised the prices of domestic LPG cylinders by 50 rupees across the country. Prices of commercial LPG cylinders have also been hiked by 350 rupees 50 paise. Now, with this price increase, which will be effective from today, that is 1st of March, a 14.2 kg of domestic LPG cylinder will now cost 1,103 rupees in Delhi, about 1,102 rupees 50 paise in Mumbai. The 50 rupees price hike will be applicable in other parts of the country as well. Meanwhile, the price of 19 kg commercial LPG cylinder will now be approximately 2,119 rupees 50 paise in Delhi. Unlike domestic LPG, which is used by households, commercial LPG prices were revised at regular intervals. So far this year, they have been raised almost twice. The first increase was on 1st of January when the prices went up by 25 rupees per unit. Now, global crude oil and fuel prices have skyrocketed in the aftermath of Russia's invasion of Ukraine. To shield consumers from extreme fuel price volatility, the government had directed state-owned OMCs to halt regular price revisions of fuel like petrol, diesel and LPG. As a result, OMCs did not hike domestic LPG price since July 2022, while petrol and diesel prices were not revised since early April of last year, the biggest price freeze in nearly 2 decades. Consequently, OMCs incurred heavy losses on the sale of these two fuels as they were selling below global prices. To alleviate their pain and compensate them for their losses on domestic LPG sales, the centre even gave a one-time special grant of 22,000 crore to 3 state-owned OMCs back in October. But now, with global fuel prices having softened and considerably so from highs of 2022, the OMCs seem to have some wiggle room to hike fuel prices and recoup some of their losses. Now, it could be a difficult year ahead for farmers as well as consumers. Several reports have hinted at concerns of an El Nino impact, which could be a dampener for crop yields and result in food inflation. El Nino is the abnormal heating up of surface ocean waters that leads to changes in wind patterns and impacts weather across the world. The weather phenomena occurs every 3 to 6 years. The last time it was here was back in 2018, a year of below normal rainfall in the country. Now, since 2018, however, India has witnessed 4 good monsoons in succession, but the US-based National Oceanic and Atmospheric Administration has predicted a re-emergence of El Nino with a 55 to 60% probability in June to December period. This could adversely impact Indian monsoon. Now, there is a possibility of a drop in agriculture output that could keep inflation high in the current financial year. All instances of drought, remember, over the last 20 years have been in El Nino years, according to MK Global Research. They have said, and I quote, "A drought this year is likely to lead to worsen price fluctuations. Given the already tight supply situation and entrenched price pressure, this will tighten the fiscal situation further, as minimum support price hike will need to be higher to ensure fair returns to the farm sector," the report said. The report comes in the wake of Finance Ministry's monthly economic review, stating that if predictions of a deficient monsoon is accurate, it will lead to lower agriculture output and higher prices. However, overall consumer price inflation is dependent on many other factors, including crude oil price, and a decrease can offset the increase in food prices. Analysts, however, say that a fall in agri output would impact rural demand. But moving on, ahead of assembly elections scheduled to be held later in the year, the Shivraj Singh-Chauhan government in Madhya Pradesh today presented a populistic budget, but without deviating from the self-reliant vision of governance. Finance Minister Jagdish Devda tabled the state's first paperless budget today, with special focus on welfare of women, farmers and youth of the state. No new tax has been announced in the budget, while the government will provide e-scooty to girls to encourage them to pursue higher education. As per the economic survey report, Madhya Pradesh has recorded an increase in gross domestic product by 7.06%, currently at 13,22,821 crore rupees. And in news from the automobile space now, the February auto sales numbers have come in as a dampener for two-wheeler companies as they continue to log in tepid sales. Bajaj Auto has reported a 11% fall in total vehicle sales at 2,80,226 units. Exports declined 38% to 1,26,935 units compared to 2,03,273 units. Meanwhile, car makers reported rise in sales, indicating a positive trend across segments. Maruti Suzuki reported a 5% rise in February sales. Its exports, however, dipped 28% to 17,207 units from 24,021 units in February last year. Hyundai, Kia, Tata Motors and Mahindra also registered rise in sales, with Kia logging in a 36% year-on-year increase in domestic sales. Now, drop in Bajaj's February sales number indicate a worrying trend of continuous contraction in domestic two-wheeler volumes due to various factors ranging from regulatory changes, emission norms and the COVID-19 impact. As acquisition costs have gone up, entry-level models have been the worst hit. In news coming in from the IT space, amidst news of layoff, there are also positive signs going by Nasscom's latest report. The sector added 2.90 lakh new jobs to take the overall number to 54 lakh employees in the sector, of which 20 lakh are only women employees. At a time when participation of women in the workforce has been on a decline, the IT sector stands out as an exception. In other notable points from the Nasscom report, the tech sector is on track to cross $500 billion in 2030. The top 5 companies have a strong deal pipeline of $18 billion, the report said. However, also cautioning that there are a slew of headwinds the sector is staring at. They include continuing geopolitical challenges triggered by the Ukrainian-Russia war and the employability gap in the sector. The growth momentum in India's manufacturing sector remained steady during the month of February. This has been a result of new orders on the one hand and output increase at similar rates on the other hand in January. The seasonally adjusted S&P Global India Manufacturing Purchasing Managers Index, also called PMI, was at 55.3 in February, little changed from 55.4 in January. The February PMI data pointed to an improvement in overall operating condition for the 20th straight month. In PMI parlance, a score above 50 means expansion, while one below 50 indicates contraction. Now, as per the survey, 98% of panelists reported no change in employment. Job creation, however, failed to gain meaningful traction as firms reportedly had sufficient staff to cope up with the current requirements. The domestic market has been the main source of new business growth as new orders from abroad increased only fractionally. The rise in international sales was the weakest in the current 11-month period of expansion. On the prices front, input cost inflation accelerated to a 4-month high, with firms mentioning higher prices for electricity components, energy, foodstuff, metals and textiles. Meanwhile, business confidence improved in February, with firms expecting demand strength, new product releases and investment to bode well for growth prospects. And with that, it's a wrap on this edition of Business Plus. For more incisive news analysis and cutting-edge documentaries, keep streaming News 9 Plus. Thanks for watching.